Progress.
Yeah, good morning. What's up, traders? It's been a while. I uploaded a video and trust you guys are all right. Okay, today's class is going to be a very brief one and is about how to trade trend line the right way. So if you follow me closely, you're going to learn a lot from this class. It's going to be very short and brief how to trade trend line the right way. So basically, you ask what is trend line. Trend line is just a tool in trading view. So this trend line, it's just a slanty line that could be drawn either from the bottom to the top, or from the top to bottom. All right. So it's not actually a flat tool. So it's very slanty, depending on how you're drawing it. So trend line from the word trend is being used to determine a particular direction of the market at a given point in time. Take, for instance, we have three trends of the market. We have the, the upper trend, all right, where the market is making higher highs and higher lows, all right, higher highs and higher lows. So this is uptrend, all right. So if the market is trending to the downside or making lower lows and lower highs, is seen as a downtrend or lower trend. Then when the market is actually moving inside a box, for instance, this way, or is rather seen as making support and resistance. All right, resistance, supports, resistance, supports. So this market is clearly ranging or consolidating. So these are the three types of trends. We have the bullish trend, the bearish trend, and the consolidating trend. When I say bullish trend, I'm still referring to uptrend. All right. When I say bearish trend, I'm still referring to downtrend. Then sideways markets, same thing as consolidating or ranging markets. So these are just the terminologies you will be hearing while um, on this class. So for you to know that the market is trending to the upside, uh, now you use your trend line to mark points together when you draw it this way. So if I mark this trend line from the bottom, it simply means that this trend line is acting off as what? A support, as a base for the market to dive to the upside. You can see clearly anytime the market touches this line drawn from the bottom, it bounces off. All right, meaning that the market is trending to the upside and you should be looking for buying opportunities the moment the market drops. And the rule of the trend line is that when the market makes the third touch, all right, that's when you should buy. All right. Now, look at this one. Market is trending to the downside. In this case, the trend line is acting as what? As resistance. Why? Because anytime the market gets to this place, it's just like the ceiling, all right? Anytime the market gets to this line, it drops, all right? It drops, signifying that this place, this line is acting off as what? Resistance. Then this one, it bounces off. This one reacts as what? Support. So trend line can be used to determine the direction of the market trend. Common word trend. Trend is something that is actually happening at a particular point in time, something that is occurring currently is actually trend. For instance, they can be saying that, okay, this music is trending, and a musician released an album and the music is all over the billboard, top charts, and the rest of them. So it's trend, all right? So back to this topic, how to trade trend line the right way. Okay, trading trend line the right way. Now, you all know that I've told us that I'm an SMC trader and I love using trend lines in a way. On SMC traders, we see trend line as liquidity. So in order for you to avoid being liquidated, you should apply this method and you did be good with trend line, you'll be very good and perfect with trend line. Now, for instance, I said for a market, for you to know that the market is trending to the upside, it has to be creating what? Higher highs and higher lows. There's a high, excuse me. So this is a low, a high, a low, a higher high. All right. Now, when the market has done this, like, okay, then the next thing, it forms this low, then the low goes again to break this previous high. All right. So you've seen that this is a high. What's happening? So this is a high that was created. This high was here before the market pulled to the downside to form this low. Then this low broke above this previous swing high created, causing what we call break of market structure, BMS, or some people can denote it as BOS. So BMS, so simply means break of market structure. So the market formed, after breaking this high, it formed a low, all right? Then this low went and broke this previous high created before the market returned to the downside. So here is what we call high, high, all right? So that's a higher high, higher low, higher high, then higher low, okay? Higher high, then higher low. Now let me fix that one. Is a higher high because it broke above this previous structure, then higher low. Okay, let's do it this way. Now, here, these structures broken are called BMS, break of market structure, break of market structure, then break of market structure. So when you open your chart and you observe that the market created a high and a low, then the low broke above the previous high, forming a higher high, all right, which is this. So I don't want to digress. So you're supposed to mark out this other block. All right, then expect the market to return, then you buy. But that's not what we're doing. We're talking about trend line today and how to trade trend line correctly. Now, what I said is for you to trade trend line correctly, you mark out the trend line, joining points together. All right. So you have to see this structure first. All right. What's happening to my mouse? You have to see the structure. First touch, second touch. Now, before the third touch, which is where you're supposed to make your entry, you have to observe that the market has done this break of structure, break of structure. Be looking at what is here. This is your formula. For you to know that the market is trending to the upside, it has to be doing higher, low, higher high, higher low, higher high, and higher low. All right. So, and it has to do what? Second criteria is it has to do what? Break market structure. or you can say break of structure, BMS. So meaning that on the third touch, since it has broken first structure, second structure, which is this is the first touch, second touch, and you're anticipating the rule of trend line is that it has to come and make the third touch. You're supposed to buy at the third touch of the market. So now it has, if it does not break structure this way, that's this movement. The second touch does not break the previous swing high, then it means that it's not going to be a valid trend line. Then applying SMC, you mark out the last, in this case, you call it demand zone, all right, or the last red candle before this impulsive move to the other to the upside. And this movement can be seen as an institutional candle because it went impulsively to the upside, breaking the previous swing high, causing what we call break of market structure. So now, the third touch of this trend line now is that you're anticipating that the market should come to this demand zone, tallying with this other block. All right. This trend line acting as a confluence, then this is going to hold price off. So this is how you're supposed to trade using trend line. So if you master this particular strategy, a lot of people find it difficult to trade trend line because some of them, they told them that at the top of the trend line, they should buy or sell. But they don't know the reason why when they try to buy, the market will start selling. When they want to sell, the market start buying. It's simply because there was no break of structure. All right. So this is how I trade my trend line. It has to do break structure, break structure. So I'm waiting for the third touch, which is going to tally with another block. All right. Then I'll take my buy, targeting this place as what? My take profit area, the previous swing high created. And that is it. Very simple and straightforward. All right. Very simple and straightforward. So don't forget that we are still on this how to trade trend line the right way. Now, let me go to, there was this trade I'm waiting for on volatility 100, VIX 100. All right. VIX 100. Okay, let's quickly check that. I really said that this class will not be too long. So let's quickly just get it right. VIX 100. Where is it? Okay, this is it. VIX 100. Now, from the look of things, it's very obvious that the market is trending to the upside. How would you know? Simple. Look at it. You can observe break of market structure. You can see swing highs being taken out. You can see these highs being taken out. All right, and this is on the 24 hours. This is on the daily. And there's something I've failed to show you guys, which is this. Always for you to draw a perfect trend line. So you can see we have candles, we have lines. All right, if you change it to lines, it will show you the perfect places to pour. You can see these are the stringer. It eliminates the candle wick. Some persons are always confused about should I mark it? There are three ways to draw trend lines. Some persons will tell you we have body to body, we have week to week, and we have body to week. All right. So some persons, these are the way they draw their trend line. So for you to have a perfect trend line drawn, I always change it to line chart. Right. So look at this page. You come, you can see we have bar charts. We have candles, which is normal Japanese candle. We have halo candles. We have volume candles. We have lines. You can see I marked this star. So you mark this star, it makes it you're making it your favorite. All right. So you don't have to come to this place. So the moment you click here, it turns back to candle. If I click line, it eliminates the candle wicks. So now you can see, I can just draw the most current places this way. Just example as I was showing you. So for me to engage on this trade, now I have to wait for this high. You can see it's clearly, it has broken structure. So this is first touch, second touch. All right. So I'm waiting for what? The third touch. Then I'll buy from this region. I'll buy from this region to the upside. All right. When I say I'll buy from this region, I just mean the market had to return to this point. Then I'll buy to the upside. So I'm not going to involve on this trade until the market returns here. And look at another way. Is also very simple. You can bring your trend line because these are the most recent points. All right, don't really need to go that far. You can see the trend line this way. And when you're trying to draw a trend line and it's not aligned, you don't force it. All right, don't force trend lines. It's not correct. You can see how I've been able to do this. So this is a break of structure. The market returned here. So this is the first touch, second touch. I'm anticipating that the market have to return back to this point. All right. The third touch is where you get involved and you climb to the upside. It's just as simple as that. All right. So this is on the daily. Now let me turn it back to candle. You can see how beautiful it is. And you can see how we're able to eliminate the candle wicks. But if you look at it this way, you might be confused as to like, how do I mod this? But putting it to this line chart, it eliminates the candle wicks. Don't mind you, I'm not saying that the candle wicks are irrelevant because on a more lower time frame, the candle wicks are actually real candles. All right. So, but the line chart eliminates noise and false breakouts. All right, because these are false breakouts. And what did I say? I said this trend line acts as what? As support. In this case, it's serving as a base because it's holding price off from bouncing to the downside. So it's serving as support, just like you standing on the floor. All right, so this is what is. You can see how multiple times the markets rejected from this trend line and bounced off, causing break of market structure and returned here. So it's going to go and break this high again, then do this. So this is just the simplest way to trade trend line. And let's permit me now to go to the 1 minute time frame to show you a trade I'm actually waiting for on the 1 minute time frame, and the reason as to why I am not yet on that trade, because I'm still waiting. So let's see, this is on the 1 minute time frame. Okay, first of all, let's see 5-minute time frame. So if the market does not break structure, you don't get involved. Don't get involved because you're going to cry. You're going to be liquidated rather, if I say cry. Okay. I think it's still the same thing that I saw. There is a trade I'm waiting for. Okay, it's still somewhere around here. It's still here. It's still here. Look at it. It's still very simple. We're waiting. This, you can see from this 10-minute time frame, you can clearly see that the market was doing what? Trending to this downside, then we change character, we're moving to the upside. So that's not what I'm teaching. I'm teaching trend line. So this is basically what is happening on the 10-minute time frame. You can see this first touch, this second touch. So the third thought, you can see break of structures, right? So you can even use it to scalp if you want. You can see break of structures. That's the first one is actually change of character. So you can see how we're trending to the upside. Okay. So if we want to get involved, we have to wait for the market to do what? Return to this point. Then we'll push to the upside. All right. So trading trend line the right way is you taking trades that has broken structures to the upside. I remind you, we are still bullish on this particular pair. All right. So trying to take a counter trade is very risky. It's very, very risky. So you have to put that in mind and know what you're doing. Okay. I know what you're doing. So this is it. It has to form this structure before you get involved on the trade. So trading trend line the right way is that it has to do what? Break structure. Okay, break structure, then you get involved. And look at this one again. I'm just trying to look for nice and perfect example. Nice and perfect example. Okay, let's turn it to line. This is one. This is two. So basically, be like, you can say this is point one, point two. So technically, the market should do what? Come to this point, point three, then to the upside. Why would you do that? You can see it has been trending to the upside. It has been breaking structural highs. So these are external structures. We have external market structures and we have internal market structure. You can see how the market has been breaking structures, breaking. So it has to come back to this point. Then we take it back to the upside. So that is what the market is doing. So it's very cool for you now. If you want to get involved, it has to come to a more discount zone. All right, discount zone. Then uh, you buy. All right. So this for VIX 25, the market has to return back to this point. You can see clearly. So you don't just say, I'm waiting for the third touch. What are your reasons? You can see the break of structures. So you can see, look at these highs taken out. These are internal highs. Look at these ones. Look at them. Being taken out. So these are structures broken. So trading trend line, the right way is you observing that the market has won't break structure. This is the pattern. If you don't see this pattern, don't get involved. All right? Don't get involved. So that will be the end of this class. If you have any question as regards to how to treat trend line properly and you want me to also review this class, please do well to drop a question in the comment section and I'll be very glad to respond. Thank you.